economic contagion.
The blow from the coronavirus outbreak could push Singapore's economy into recession.
Ripples around the world, hitting airlines, car makers, tech firms, retail and tourism.
How is a disease where 99% of the confirmed cases are in mainland China causing such global disarray? At the risk of stating the obvious, China's economy is big, much bigger than when SARS hit in 2003. Then mainland China was the world's 6th largest economy. It's now the 2nd biggest, with nearly 20% of global activity. Its share of global growth is even higher, about a third. And as China has grown, so have its imports and exports. It now accounts for more than a tenth of global trade.
So the first thing is that more people are affected by this virus outbreak than they were around SARS. And the second thing is the policy initiative taken by the Chinese authorities. They are quite aggressive and they imply that the Chinese economy has been closed for a long time, which in itself will result in a drag to the economy. And that is going to spill over to the rest of the world because China plays an important role both in terms of its size of the global economy, but also in its trade link with the other countries and its move up in global supply chains.
One important way China's shutdown will affect the world is through tourism. China is the world's largest tourist, with 150 million travellers heading abroad each year.
The Chinese are big shoppers when they're overseas. They spend almost 3 times as much as the average visitor to the UK. So Burberry and other global luxury goods groups will feel the abrupt halt in Chinese travel. But tourist attractions will feel the change too. The Shakespeare Birthplace Trust told us that visitor numbers are down 15% on last year.
But the more unpredictable impact is through China's role as a supplier of parts to the world. In cars, say, China accounted for just 1% of global auto parts exports in 2003, but now provides 8%. Its role in consumer electronics and electrical components is much larger, prompting warnings from companies like Apple and Samsung. Wuhan, where the virus started, makes more than half the world's NAND flash products, a type of memory used in PCs and laptops. That's already causing problems, according to one technology company.
But there are already shortages in solid-state disk. There's quite a significant level of price rises that's already happened. I mean, prices have risen in excess of 25% just really in the last 2 weeks, and they're continuing to rise at the moment. There's a lot of lockdown on volume purchases in solid-state disk as well. So some manufacturers in the supply chain are limiting the number that you can actually buy as well, to try and spread the stock out across the supply chain as well. So we only see that getting worse at the moment.
The UK is less reliant on China than big Asian economies, but there is concern. Newsnight's been told that the government has already been in touch with some of the big business groups asking for information from their members. Are they already seeing problems from coronavirus? And which parts of their supply chain could be vulnerable?
Even once the virus is brought under control, the economic fallout may linger. Cuts to air and sea cargo could mean capacity shortages and higher prices as factories start up again. China, the engine of global trade, has stalled, and that means slow going for the global economy.